if I told you that in Vietnam, some of the most powerful people in the country never appear on election posters, never give viral speeches, and almost never trend on social media, yet they quietly decide who becomes a billionaire, which real estate projects rise from the ground, and which companies are saved when everything is collapsing. Their power doesn't come from votes or rallies. It comes from signatures on loan documents, control of deposits, and the invisible flow of credit inside the banking system. In this video, we're going inside Vietnam's hidden financial dynasties, the families behind Techcombank, VPBank, ACB, and a whole web of other banks who collectively influence tens of billions of dollars of the nation's wealth. They are Vietnam's quiet kings, modern royalty built on balance sheets instead of palaces. Before we dive into their stories, make sure you subscribe to Elite Existence, turn on the notification bell, and comment "Power" if you're ready to see who really controls Vietnam's money. Number 1. The Ho Dynasty. Our first dynasty doesn't begin in a palace or a marble government hall. It begins in the chaos and opportunity of the 1990s, when Vietnam was opening its doors and a new class of entrepreneurs was returning home from Eastern Europe. Among them was a man whose name most people outside Vietnam have never heard, Ho Hung An. No ministerial post, no loud political speeches, just a sharp mind, hard-earned capital, and a network of partners who understood that the future of power in Vietnam would run through banks. Today, that bet has paid off. Ho Hung An is known as the longtime chairman of Techcombank, one of Vietnam's most important private banks. To the outside world, Techcombank is just a brand on a tower and an app on a phone. But look at its balance sheet, and you see a financial giant, hundreds of trillions of dong in assets, millions of customers, and a deep presence in mortgages, corporate lending, and consumer finance. When a new condominium project rises in Hanoi, when a major company issues bonds, when a young family signs its first home loan, Techcombank is often somewhere in the picture. But this isn't simply the story of one talented banker. It is the story of a family constellation quietly wrapped around the institution. Public filings and Vietnamese business media show that Ho Hung An's relatives collectively control huge blocks of Techcombank shares. His son, his daughters, and other related persons appear again and again in shareholder lists. When you add it all up, you don't just see a bank owned by the market. You see a bank with a powerful family spine, a cluster of relatives whose wealth and influence rise and fall with Techcombank's every decision. Imagine the scene in a modern glass office in Ho Chi Minh City. On one floor, Techcombank's executives are discussing digital strategy. On another, teams are modeling credit risk and interest rate scenarios. Somewhere higher up, in a quieter meeting room, a small group reviews long-term alliances, property financing, and corporate partnerships. In many of those rooms, whether they are physically present or not, the incentives of the Ho family are in play. Protect the bank, grow the bank, make sure the dynasty thrives. For years, the Ho family's story has been intertwined with another powerhouse, Masan Group. If Techcombank controls how Vietnam borrows and saves, Masan reaches into how Vietnam eats and shops, from noodles and fish sauce to beverages and retail chains. Ho Hung An has been a key figure in Masan, working closely with its founder. That creates a unique triangle, a banking empire, a consumer empire, and a family nucleus sitting at the intersection. A worker buys instant noodles at a convenience store, pays through a digital wallet, repays a small loan, and somewhere behind that everyday transaction is a web of contracts, loans, and shareholdings, connecting Techcombank and Masan under familiar surnames. This is how modern dynasties operate. They don't need royal robes or public parades. They own pipelines. The pipeline that moves food into supermarkets. The pipeline that moves credit into real estate. The pipeline that moves foreign investors' money into local companies. Control the pipelines, and you don't need a throne. You already have one. Of course, power at this level is never risk-free. The same leverage that builds a fortune can threaten it. When real estate overheats, when regulators tighten rules, when global interest rates jump, banks like Techcombank suddenly have to navigate dangerous waters. Non-performing loans rise, investors panic, stock prices fall. One rally in the market and the dynasty climbs the rich lists. One downturn and billions of dollars in paper value evaporate. Yet despite this volatility, the family remains deliberately low profile. You don't see daily talk show appearances. Instead, you see carefully staged annual general meetings, dense financial reports, and formal interviews where every sentence is measured. measured. The public sees Techcombank, the brand. Insiders see the Ho family, a durable center of gravity guiding that brand. In any economy, the question is always the same: who gets capital, on what terms, and at what speed? In Vietnam, when that question passes through Techcombank, the answer is shaped by a dynasty that learned to turn Eastern European experience into Vietnamese influence, that connected consumer goods, property, and finance into one invisible umbrella, and that now quietly sits above billions in assets. The Ho family does not rule with a crown. They rule with a balance sheet, a cap table, and a web of relationships that makes them one of Vietnam's true quiet kings. Number 2. The Ngo clan. If Techcombank is the polished digital daredevil of Vietnam's banking world, then VPBank is the high-speed street racer, aggressive, flashy in its numbers, and constantly flirting with the edge of what is possible in a fast-growing economy. At the center of this machine is another name most people outside Vietnam have never heard: Ngo Chi Dung, the chairman of VPBank and the face of a second powerful banking dynasty. Like many of his peers, Dung is part of Vietnam's Eastern Europe generation, businessmen who spent crucial years studying and working in the former Soviet bloc before returning home with capital, connections, and a feel for market economics. When he took the helm at VPBank, the institution was not yet the giant it is today. Vietnam's private banking sector was still taking shape, and the rules of the game were still being written. But Dung had something that would tilt the game in his favor: a family willing to bet big on their own bank. Vietnamese media have often described VPBank as an emperor that created billionaire families. A large part of that comes down to how concentrated its ownership has been. At one point, just 3 people held around 359 million VPBank shares: Dung himself, his wife Hoang An Min, and his mother Vu Thi Quyen. Picture that for a moment: the chairman, his spouse, and his mother forming a tight triangle at the peak of the shareholder pyramid. This isn't a loose group of investors. This is a family core welded directly onto the bank's fate. As VPBank grew, regulators tightened the definitions of related parties and ownership limits. Even under these stricter rules, reports have shown the Ngo clan still holding a powerful block of capital. When you read that VPBank's assets have surged past $40 billion, you aren't just reading about a corporate success. You're reading about a family that has harnessed the entire growth story of Vietnamese consumer finance. Inside VPBank's glass offices, the business model is clear: lean into growth. The bank moved aggressively into consumer finance, small and medium enterprise lending, retail banking, and strategic partnerships with foreign investors. These segments are high margin, but higher risk. They depend on data, underwriting models, and a deep understanding of what ordinary Vietnamese borrowers can really afford. For a typical manager, this is a career bet. For the Ngo family, it is a generational bet. Every expansion in lending, every new partnership, every aggressive strategy amplifies both the potential upside and the personal risk to their own fortune. When Vietnam's economy is booming, this model looks genius. Foreign investors praise VPBank as a growth champion. Analysts talk about its ability to reach underserved segments. The bank's shares climb. On paper, the family's wealth explodes. Financial magazines rank them among the richest in the country, their net worth swelling with each quarter of strong results. The narrative is straightforward: a visionary chairman, a bold family, and a bank riding the wave of Vietnam's rise. But markets do not move in straight lines. When global conditions shift, when interest rates rise, when real estate and corporate bonds come under pressure, the same high-speed growth strategy suddenly feels dangerous. Questions emerge: how robust are VPBank's risk controls? How resilient is its capital? How much strain can its borrowers handle? In this mood, every headline, every rumor, every policy change becomes magnified. The bank's share price shakes, and with it, the family's wealth. This is where the idea of a quiet king becomes fascinating. You will not see the Ngo clan campaigning in the streets or arguing on talk shows. Their battlefield is different: closed-door meetings with regulators, negotiations with foreign partners, internal strategy sessions about provisioning, capital buffers, and digital transformation. They have to persuade investors that VPBank is not just a risky growth story, but a sustainable profit engine. They have to assure the State Bank of Vietnam that their aggressive model will not turn into systemic danger. Their words are not designed for viral clips. They are designed for investor memos and regulatory reports. At the same time, their influence extends far beyond VPBank's balance sheet. The loans that fund new apartments, cars, and small businesses shape daily life for millions of Vietnamese. A decision in a VPBank credit committee can mean the difference between a factory expansion and a failed project, between a family buying its first apartment and being shut out of the housing market. When those decisions are made under a family-controlled structure, you are looking at a dynasty that converts its appetite for risk into real-world change, street by street and home by home. So when you look at VPBank's logo glowing over Hanoi's traffic at night, don't just see a bank. See a family that turned its own capital into a rocket engine, bolted that engine onto a mid-sized lender, and blasted it into the top tier of Vietnam's financial system. In good times, they are celebrated as bold architects of growth. In bad times, they carry the weight of concentrated ownership and public scrutiny. That is what makes the Ngo clan a perfect second chapter in the story of Vietnam's quiet kings, a dynasty built not on caution, but on the art of riding growth right up to the end. Number 3. The Tran Dynasty. Our third dynasty feels different from the first two. If the Ho family represents the polished integration of banking and consumer empires, and the Ngo clan embodies high-speed growth, the Tran Dynasty at ACB is a story about legacy, crisis, and comeback. It has the flavor of a classic generational drama, a father who helped build one of Vietnam's first great private banks, and a son who had to step into leadership just as that bank was shaken to its core. A CB, Asia Commercial Bank, emerged early in Vietnam's transition toward a market economy. In the 1990s and 2000s, it became a symbol of private sector banking, a strong branch network, a focus on retail customers, and a reputation for professional management. At the center of its founding story is Tran Mong Hung, a banker whose name became closely associated with ACB's rise. Alongside his wife, Giang Tu Thuy, and other partners, he helped build a bank that looked and felt modern, safe, and ambitious compared to the old state-owned giants. For years, ACB seemed like a straightforward success story. Then the storm hit. In the early 2000s, the arrest of ACB's powerful vice chairman, Nguyen Duc Khien, sent shockwaves through Vietnam's financial world. Khien was not only a major banker, but a famous figure in the country's football scene. His fall ignited a crisis of confidence. Customers wondered whether their deposits were safe. Investors watched the stock nervously. Regulators tightened their gaze. Suddenly, ACB's brand of stability was in question. In this tense moment, the role of the founding family changed. Previously, the Tran name had been part of the bank's origin story, a respected legacy in the background. Now, the family had to step directly back into the spotlight. In 2012, Tran Mong Hung's son, the relatively young and foreign-educated Tran Hung Huy, was appointed chairman of ACB at just 34 years old. Imagine that scene, a new chairman, barely into his mid-30s, walking into a boardroom where reputations, careers, and billions in assets are on the line. For your viewers, this is where the narrative becomes cinematic. You can picture the headlines, the whispers, the skepticism. Is he too young? Can he handle the regulators? Will he be able to stabilize the bank his father helped build? Behind him stands the weight of family legacy. In cultures where the family name carries deep significance, failure would not just be personal, it would stain the brand that his father spent decades creating. Over the years that followed, ACB slowly rebuilt its reputation. The bank focused on its retail strengths, tightened its risk management, and projected an image of conservative, disciplined growth. Reports began to describe it again as one of Vietnam's healthiest banks, with solid asset quality and a clear strategy. In this recovery, the Tran family's presence was subtle but essential. The founder, having stepped away before, reappeared in public narratives as a symbol of continuity. The son, increasingly visible, became the human face of the bank's new era. Younger, internationally minded, but still deeply rooted in the same family tree. Ownership and governance also reflect this dynastic pattern. Over the years, members of the Tran family have held significant stakes in ACB, and both parents have played roles on the board. Their wealth is not separate from the institution. It is tied up in it. That alignment of incentives is powerful. In moments of stress, they have every reason to protect not just shareholder value value in the abstract, but their own net worth and their own surname's reputation. This is what makes the Tran story so important in the broader picture of Vietnam's quiet kings. It shows that dynastic power is not only about building empires in times of growth, it is also about stepping forward when the empire is in trouble. When a scandal strikes, many executives can walk away to other jobs or industries. A founding family does not have that luxury. Their identity is too tightly bound to the institution. So they do what dynasties have always done. They return to the front line, accept responsibility, and fight to rebuild. Today, when a customer walks into an ACB branch to open an account or apply for a loan, they may not know the details of the Kien scandal, the boardroom battles, or the family drama. They just see a professional bank that seems stable and competent. But behind that everyday experience is a father-son story, an older generation that built, a younger generation that repaired, and a family name that has survived one of the most dramatic tests in Vietnam's banking history. In that sense, the Tran dynasty represents a different kind of quiet kingship. It is less about aggressive risk and sprawling conglomerates, and more about the stubborn, patient work of restoring trust. No crowns, no palaces, no loud speeches, just a family determined that their bank and their name would outlive the scandal and emerge stronger on the other side. So now you've seen behind the glass doors and beyond the brand logos. The Ho family at Techcombank, turning Eastern European lessons into a powerful alliance between banking and consumer empires. The Nguyen clan at VPBank, riding the high-speed waves of growth and risk. The Tran dynasty at ACB, absorbing scandal, staging a generational comeback, and rebuilding trust in the wider web of Zhang, Zhou, and Nga families at VIB, TPBank, SHB, and CA Bank, weaving banking into gold, real estate, hotels, and more. These are not kings in the old sense. They don't wear crowns, and they don't rule from palaces. Their thrones are boardroom chairs. Their scepters are loan approvals. Their kingdoms are balance sheets measured in billions. If you want more deep dives into the families, cartels, and hidden networks that shape money and power around the world, subscribe to Elite Existence. Turn on all notifications and comment "Quiet Kings" if you made it to the end. I'll see you in the next episode, where we follow the money again.